Hey guys, it's the Holy Macro Show. I'm just with you guys today. It's only me because Shop is out today, but he'll be back next week. So I just wanted to go over a bunch of things. People have reached out to me and asked me about the presentations in New York City. I'll go through some of that today. But I want to start out talking about the market here and the environment that we're in. There's a lot of interesting things about this environment because it's much different than we have seen for the last 20 years. We've seen periods of time. I mean, you could even go back and say 40 years possibly. We've seen periods of time where bond yields have gone a little higher, inflation's got a little hotter, the dollar has gotten a little beat up. We've seen periods of time that looked like that. However, we haven't seen periods of time where it's really sustainable and is in a super cycle. And I think we're in a commodity super cycle for a lot of reasons. And the one thing that we need to continue to pay attention to is copper. And guys, if you're watching this, please subscribe, retweet this. It's only me today, so I can't really promote it on Twitter or promote it on YouTube. So feel free to share it around. That would really help me out. But just looking at this in chart of copper. Now, the one thing I highlighted today is copper. When it makes 100-day highs, it really has a tendency of moving. If you actually back test this, you find that it has a very high win rate. Just a very simple system: 100-day highs, 50-day lows. So when looking at this, we had offsides positioning, which got us a reversal signal in the model to buy copper. So we bought copper basically around the bottom. It had a reversal signal. Once we got the signal, we took the trade. Now we're going to a full position in our trend following model because as we're in our reversal signal is the first signal. And then at a 50-day high, you can put on a half position for us. And now we're up here at a 100-day high. And looking at these 100-day highs here, you're seeing huge moves. That was when copper rallied 47% last year. Something that a lot of people don't know because, we've had conversations even on this show about, man, copper, Sam came on and had a huge target for copper. And a lot of people were like, man, that's crazy. That's a crazy target for copper. The one thing you have to understand is that copper, when this thing moves, it can really, really move. So this thing could absolutely get up to these levels that we're talking about. Sam was talking about $6 copper, possibly even a double in copper. This could absolutely happen pretty easily. And I'm not saying it's going to happen quickly. I'm not going to saying it's going to happen today. I am going to say that a sustainable move in copper is very possible. And copper usually follows gold. And if we're looking at a long-term chart of gold, and this is the one thing that we keep highlighting on the channel, we had a bunch of trades in copper, gold, silver this week. I mean, it's just kind of an endless thing that we continue to see for the last few years. So that's zoomed in. Sorry about that, guys. So if we zoom out here a little bit, sorry, it gets jumbled when you put a bunch of different timelines in, and I'm always looking at different timelines. So let's take the 100-day high off of it. And for you guys that don't know, it's a 20-week high is the same as a 100-day high. So if you go back and we look at this long-term chart of gold, this is just a weekly chart going back just a little bit. You're seeing this massive trend. We get a breakout in gold. Then we get a breakout in gold here. This breakout happened at the beginning of 2024. What I always say is gold rings the dinner bell for the commodity cycle. And what do I mean by that? I say gold rings the dinner bell in the commodity cycle. That means that usually the other commodities follow it. And usually, if you back test it, it's within 10 to 14 months. We're right around that time zone where it really should start to happen. Gold broke out all the way back in the beginning of 2024. You could even say, basically, you could say December 2023 or January 2024. And so that breakout happened, it became sustainable in 2024. Now we're seeing some of the other commodities move. If you look year to date, I mean, coffee has been raging. It's up 25% year to date. Some of these commodities are just ripping and nobody's talking about it. It's the same as gold. Nobody's talking about it. And Kevin Muir came on the show. And if you guys go back, if you're on the YouTube channel, Go through all of our videos. I know a lot of people are on Twitter, but you should go on YouTube. We want more people to move to YouTube. You can interact with us. There's a lot more videos and a lot more easier ways to track those videos. Um, so if you go back there and you check out what Kevin Muir said, he mentioned that gold is in a very different place than it's ever been in. And that very different place that it's ever been in is the fact that China is buying so much of this stuff that even when they say, hey, we're not buying this month, he says, most likely, why would China tell everybody about them buying gold? They're most likely still buying more gold. They want the price to drop, they want people out of it. And every dip, they're buying it up. Every time they get a chance, every month, they just continue to accumulate. And the reason is if you're going to have some sort of situation come out in the United States, you're going to need to have that gold to really be able to fight that battle. So that's one thing to continue to look at. And so what Kevin said is that the game has changed as it comes to gold. For me, I just think it's part of the cycle. I think the way cycles work is markets are very cyclical and over time. I mean, if we go all the way back at this chart, let's take a look at the monthly. If you go back on this chart, you can see that gold, it goes through cycles, and asset classes most of all go through cycles. So if you're looking at stocks sometimes are the best place to be. Most of the time, they're the best place to be. Sometimes the best place to be is commodities. Sometimes the best place to be is bonds. Sometimes the best place to be is currencies. Sometimes cryptocurrency. Markets are very cyclical, and you got to think about it in a very different way than people have thought in the past. In the past, people would say gold is dead, and by the time you get all the way to here, any gold bulls that were ever in existence have left the market at this point. You know, you get to 2000, who's really left pounding the table on gold? I know a few guys, but it was very rare at that point. So once again, you start to get this bottom here. Gold breaks out of this downtrend that it was in for a very long period of time, and then it starts to head up again. And so this is why you have to look at markets in a very cyclical way, and not to mention just understanding that just because something has happened, it's not going to continue to happen forever. Cocoa is another one. I always like to bring this chart up because I think it really illustrates how trend trading really works. This is those lines are supposed to be on a weekly chart. But you'll see there's a lot of chop in cocoa over the years. It's choppy market, lots of false signals, and then all of a sudden cocoa explodes. It's the best trade of the year for probably about 2 years, actually. 23, it had a really great year for the commodity space, and 24 it was a really great move, and ended up moving in a big way to end the year as well. So you have these huge moves in things like cocoa, gold, and you're looking at the commodity complex as a whole and understanding that there's so many things and so many other areas that you want to position yourself in. And so part of the thought I have today is I want to talk about the idea that we're in a different period in the market than we've been in a long time. So I want to talk about a couple charts here. So the period I'm talking about, we're in a down dollar environment. Not yet. I wouldn't say that today, but I'd say that we probably saw the peak in the dollar in 2022. And I think the dollar is rolling over. Once again, it just broke out. It's kind of making a move. It was in a box for a long time, basically over a year and a half. So it saw it in the box for a long period of time, basically bouncing around those levels between 104 and 100 over and over again. Sorry, 107 and 100. So it just kind of bounced between those levels over and over again. Then it breaks out of those levels, but it got sold off very quickly. And the reason why I'm saying that that's significant is the positioning in the currencies against the dollar. So if you guys, if you don't know about the dollar is just a weighted basket of currencies. So it's mostly the euro, the Canadian dollar, the Japanese yen, and the Great British Pound. But the euro is the biggest piece of the dollar index. So as you're seeing us go through this strong dollar period, which basically started all the way back in 2008, You basically bottomed in the dollar. We've just kind of been moving up slowly in the dollar all that time. We had a period of time where it just chopped around. Chopping around could still be good for commodities and these areas like that. So, like cyclicals, like energy sector, like copper miners, metals and mining. Basically, those areas can do very well. The dollar is just kind of stuck in a range. It was all the way until the end of that period, which was around 2015. And then once 2015 happened, technology has been the massive outperformer for years. And we've been in this uptrend in the dollar. So the dollar environment shifted. 2017, something I've also highlighted, which after most elections, you'll see the dollar get a boost. And then after the election, it has a tendency of selling off a little bit. In 2017, 2016, Trump gets elected. The inauguration in January basically marks the top for the dollar. The dollar starts to reverse lower. You saw a lot of commodities start to catch a bid at that time. But these are only short-lived moves in the commodities complex. Same as 2020. You see all the money get flooded into the market from COVID, PPP loans, the Fed doing unlimited QE, whatever it was. There was a lot of money flowing into the market at that point. And at some point, the dollar basically gave way right after the 2020 election. So the dollar falls off of a cliff. 2021, commodities are going nuts. And then 2022 happens. 2022, you basically have the Russia-Ukraine crisis. People start flooding to dollars again. And yes, for a little while, Q1, the dollar and commodities went up together and stocks got hammered all at the same time. A rare environment, but this happens it's a very late cycle environment. And the market ends up going into a bear market at this point in 2022. And then we see this huge rally in the dollar. That year had a massive rally in the dollar in 2022 into 2023. And then the dollar basically went sideways ever since. So that's just the backstory of the market we're in for the dollar. Now, looking at that top, this is where it rolls over. And the reason why I'm saying it rolls over is a lot of reasons. One, it's very bad for the United States to have a strong dollar. It's not within our interest to have a strong dollar. It's not within the global interest to have a very strong dollar here. It's not within the market's interest to have a strong dollar here. Liquidity is already pretty tight right now. It's not terrible, but it's not loose. And so liquidity is the lifeblood of a market. If we don't have liquidity in the market, you're going to see this thing roll over. And so as this thing's kind of rolling over, and if you guys check out our liquidity report we put out yesterday, you can see all the reasons why I'm saying this. And not to mention the positioning in things like the euro, in things like the Canadian dollar. As this is rolling over, this is really going to give a huge boost to these commodities, especially the fact that gold has held up so well, even in this environment. That's something to be said. So one thing I'm really talking about lately is how do we trade a strong dollar environment? Because we haven't seen it in a long time. And I'll give you an example. If we're looking at cocoa, for example, is this commodity that didn't move, and I showed you that first chart, and there was a reason for that. Very choppy. If you took signals, you made some money, you lost some money, you made some money, you lost some money for basically years and years and years, going all the way back to 2006. Yes, 2006, 2008, you had a nice run, but after that, it just went nowhere. So around that point, after it makes a nice run in 2008, they decide to make a commodity ETF. And so they make these commodity ETFs around this time. You saw a lot of them pop up around this period of time because commodities were the only thing that were really working really well. And then it goes sideways for a long period of time. They basically delist it. When did they delist it? Well, right before the huge run we're talking about. So when you see these things delisted, most of the time that means it's about to have a big run. It means sentiment is at its lowest. Companies have been hemorrhaging money. They're not able to raise money for their ETF for many, many years. And next thing you know, they delist that product. And then then cocoa ends up taking off like crazy. So this is a piece of the commodity cycle that's very interesting. And this is the yield curve. So when we're looking at the yield curve, basically we're looking at the short duration bonds. The short duration bonds are where banks borrow from. And then the long duration bonds. Long duration bonds are where the public borrows from. Think about mortgage rate, 30-year mortgage rate. So 10 to 30 years being on the long end, 3 month to 2 years being on the short end of the curve. And so the banks being able to borrow at the short end of the curve, as long as the rate for the short end is below the long end of the curve, they're able to borrow money and make money all at the same time, which this leads to liquidity in the market. And so if you look at it just that way, it's kind of easy to see why coming out of a yield curve reversion and the yield steepening puts money into things like commodities. And so, people were talking to me about this the other day, and I mentioned this and said, hey, if we don't have a recession, most of the time you see a big move in commodities happen. Even if we have a recession, you see basically a fall off in the commodity complex, and then it just starts to move higher right after that. So it's something to keep in mind. But also, if you look at the yield curve and the shape of the yield curve, basically since 2008, it was in a downtrend. So basically, liquidity just kept tightening and tightening, and banks were making less and less money. Part of the reason why financials weren't doing so well. And then you get to that period of that yield curve inversion. So that inversion happens. And for you guys who remember that period of time, that was 2019. And a lot of people, and Kashop and I have talked about this a bunch, which we were headed toward the recession in 2019, 2020, either way. Any way you looked at it, the market was giving signals that we were already headed towards a recession. The government shutdown definitely sped that up. Nick, if you're watching, you can add into on this because I know you have a lot of great research on this. But yes, that was very, very significant, and everybody kind of overlooked it. But the one thing we did see in 2019, we did start to see a little bit of a bid in the commodities complex for the first time in a long time. So we saw a little bit of a bid. Gold was really running in 2019. Gold made its first big move, getting over 1,500, heading towards 1,800 in 2019. And then 2020 is when it really started to take off and take out those $2,000 levels. So looking at it that way, gold was ringing the dinner bell already. So that was in April 2019. So then you move forward and you get to 2020. And this is when the commodities complex really starts to move. So April 2020, what happens? We have oil prices going negative. So the front month future ends up going negative. I think it was $50 at the low. So it goes negative $50 at the low. There's no place to even store oil at that point. That's the reason why the storage companies started to move up. So you're basically running into this situation where if you ever want to see a capitulation moment, that was it. So 1 year later, oil basically bottoms, doesn't look back for two years. Basically going from that price, really the next month future was around $20, from $20 all the way up to $130 for oil prices. I mean, that's a massive move, and very quickly, a very quick, massive move. And do I think we're going to see that same size of a move again? I don't know. The percentage wise, I don't know. Dollar wise, yes. We will probably see, oil probably get back up over 100 pretty quickly if this move is sustainable. If there are reasons like OPEC starts to flood the market, or people are tired of inflation for some reason or another, and they're doing something to fight it, like the Fed's raising rates or something crazy, of course it will reverse. But for now, I do think oil prices are probably headed higher. But at the same time, wait for your signals, take the signals as they come. Inflation is obviously under the surface. We're even seeing the inflation expectations pick up again and again. And so if you guys have any questions about any of this stuff, feel free to write in. I'm happy to answer any questions you guys have because there's a bunch of stuff to go over today. So let's get out of this one. And so now this is a presentation that I did in New York City. So I was thinking, Kashop couldn't come today, and I was like, maybe I'll just cancel today. And then I was like, you know what, maybe I should run this, and we could just kind of chat through this with you guys. So I wanted to talk about, so I always kind of come up with a fun presentation for people. I think it keeps people excited, motivated. For me, it keeps me motivated to just talk about something that's a little bit different than you would normally talk about as a trader. Something that's a little bit outside the box, but also it's just very me. I'm always kind of looking at different reasons to stay motivated, look at the past to understand the future, and really understand the journey as a trader. And I think that's all extremely important. If you don't understand that trading is a journey, and that to be good at trading is going to take time and effort, and you're going to go through ups and downs in it, then you're probably not going to be around for long as a trader. And this is something that's important. I'm not trying to discredit anybody's journey. I am just saying you have to understand that it's a fight, and you've got to continue to fight to get through it. So feel free to write in, guys. Feel free to ask questions as this goes on. So basically, the movie Fight Club to me kind of had a bunch of different interesting things about it. One was, if you look at it as the trading journey or the journey to entrepreneurship, and it was made by Chuck Palahniuk to be kind of vague in the sense that you could kind of see yourself in the characters. And the phrase "without pain, without sacrifice, we would have nothing." And so for me, the thing that kind of always stood out to me is I had a trader many years ago tell me, when I was probably about 3 or 4 years into trading, and I was still, feeling like I could do so much better, and I just didn't understand what I was missing all the time. And he kind of sat me down and had a conversation with me, and he told me that, hey, you as a trader and your past as a BMX rider are combined. And he said, I think you're going to be a great trader. And he said, I think you'll be one of the best traders I've met. And I was floored by this, because I never put those two things together. I always thought my journey as an athlete had nothing to do with my journey as a um, as a trader. It's two different things to me at that time, and I didn't understand that they're actually similar. Um, so I usually don't go through all this stuff this much, but you guys will get to see me go through some of this. And these are things that I don't usually like to talk about in the trading community, because I really have kind of built my name to be separate from any of this stuff. But however, it is applicable to what we're talking about today, so I'm going to go through it. So when I was younger, this is in 1999, 2000, actually, I can see it on the bottom. So in 2000, I just started riding. I was about 3 years into riding at that point. And I saw this picture. I think it was in ESPN and BMX Plus. It was in a bunch of places. And so just looking at that, I saw the fact that Matt Hoffman's on here, and he's talking about all of the broken jaws and all the knee replacements, knee surgeries, and all these other things that are kind of going on with him. And so as he's having these knee surgeries, and he's having his broken jaw, fractured teeth, I look at it and I go, man, I could really do this. And I find that, looking back, I find that completely my personality. Like, oh yeah, okay, you're gonna go through all this stuff. If you want to be good at this, this might happen to you. So you might have your knee might be messed up for the rest of your life when you get done with this. Your shoulders are probably going to be messed up. You might even almost die a couple times, but hey, it's part of the game. And I understood that as part of the game. And so understanding that that's part of the game, I just continued with it. But also being 15, and this is all getting to something on trading. So I'm not just talking about myself here. I'm trying to get to something on trading and the topic about, getting through these things as a trader. It's the same thing as athletics. So looking at this picture, this is old Jason Purse footage from when, I'm about 13 years old here riding Changa one of my favorite places to ride when we were kids. Met all my friends there that I'm still friends with to this day. Absolutely love this park. My friend Bobby took this picture many years ago. That's me just doing a fufanu it's called a fufanu actually, on a sub rail at the park. And then that's me, my face cut open. I've cut my face open many times. I put my teeth through my lips a few times. I've had knee surgeries and lots of other injuries on top of it. So the picture you see above isn't quite me, but I'm almost there. And so when I was about 17 years old, I ruptured my spleen. And so when I was 17 years old, I ruptured my spleen. And the way that story goes is really messed up. So I read this book by Matt Hoffman, the guy you saw on slide 2. And so as I'm reading that book by Matt Hoffman and kind of getting an understanding of what he was going through as as a rider to get through to be a good rider and be the rider he wanted to be, he ruptures his spleen at some point within this book. And he talks about the fact that his collarbone felt like it was broken. And so when I went to the hospital, when I ruptured my spleen, I told the doctor, "Hey, my collarbone is broken." And he was like, "Huh. No, it's or sorry, I said my spleen is ruptured. It feels like my collarbone's broken and I didn't hit it." And he goes, "Oh, no you didn't. You probably broke a rib. Maybe you're probably fine." So he lets me just sit around for about 2.5 hours. At the time the X Games were on, I started watching the X Games, and at this point I'm completely delusional. He finally gets me a CAT scan. I go back, I'm watching the X Games. I'm even more delusional because I'm actually bleeding out. I don't know it at the time. And he comes back and he goes, "Hey, we have to go right now." And I go, "What do you mean?" He goes, "Well, you did rupture your spleen." And I go, "Well, get away from me. I'm watching this. I'm watching the X Games. Leave me alone. I have no idea what's going on." And so they start literally pulling me a room. They're throwing catheters into anywhere they possibly can. I'm getting catheters in my wrist, in my feet, in my legs, anywhere they can put it. I won't go any more in depth on that because it was everywhere. So I continued to get as many IVs as I possibly could get put in me. Not catheters, but I got a catheter as well. So yeah, I'm trying to remember this, but it's a lot of a lot of stuff all at once that were happening. And so basically I go into surgery and they basically tell me my next 10 days are going to be really hard for me. They tell my family like, it's going to be touch and go. I could have died, and the reason why is because they let me bleed out for so long. Normally, a spleen is life threatening, but it isn't as life threatening if they don't let you bleed out quite as much. So it was very life threatening for me, and so that was kind of my bottom as an athlete. I basically almost died, and then I didn't think it could get any worse. So these are just some pictures of riding over the years. This is friends riding. There's videos, pictures of me riding, pictures of whatever. So just going through these kind of quickly. There's me at a high air contest years ago. There's me doing a downside whip at that skate park called Changa. But what I'm getting to here, and if you guys want to pause on those, I'm just skipping through those because I'm just showing a little bit of backstory. But as we get through those, it brings me to the next part, which is trading. So what does that all have to do with trading? Well, it's the same thing we do as traders. As I'm looking at that thing of Matt Hoffman being all beat up, just hurt as a BMX rider and all the injuries that have happened to him. It's the same thing as trading. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It was never my thinking that made me the big money for me. It was always my sitting. Got that, my sitting tight. Now, let's just focus on the first part of this. After spending many years in Wall Street and after making and losing millions of dollars. So most of us see that whole thing and we go, "Oh yeah, the sitting tight. We just got to sit tight and we'll be fine." We forget the journey in there, making and losing millions of dollars, and we think, "Well, we learned from Jesse Livermore, so therefore we don't have to do any of these things." Go to Michael Marcus. I would sometimes think that maybe I ought to stop trading because it was very painful to keep losing. In Fiddler on the Roof, there is a scene where the lead looks up and talks to God. I would look up and say, "Am I really that stupid?" And I seem to hear a clear answer saying, "No, you're not that stupid. You just have to keep at it." Now, Michael Marcus has a wild story of him making and losing money. I mean, over and over again, going on for, I don't even know how many years. It almost sounds like a 5 to 10 year period in the book Market Wizards. but I don't know the exact amount of years, but he makes money, he goes homeless, he's showering at gyms, he's got this wild story of how he got to where he got to because he became one of the best commodity traders for Commodity Corp for many, many years. And so, but this is a thing that's part of the journey. And so you read this, and if you want to be a good trader, you go, hey, that might be part of my journey and I just got to do it. Or you think, once again, hey, I learned from this guy. I don't have to do any of this. And I think every good trader I've ever met has learned the hard way. I don't know traders who get into trading and just kill it automatically. And I mean, there's people who talk like they do, but anybody who tells you that's usually lying. I've never met one trader who just got it on day one and just killed it forever. It's part of the journey, and I think that's something that you have to understand and be okay with. If it's not part of the journey, you're probably going to have that period of time happen at some point. So the beginning of the journey, and my uncle would always say this when I was younger, which is you want to lose the most money you can when you have the least money to lose. And so, when you're young, you're starting to learn how to trade. It might feel like the end of the world when you lose, five to $10,000. But however, when you have a lot more money, it's going to feel a lot worse to lose that amount of money. So that's part of the reason why I say that. So I think, you have to be a little delusional to be a good trader. And the reason why I'm saying that as well is if you want to really push through it and really get through it, you're going to be misunderstood by people. And that doesn't matter what you do. You could be an athlete, you could be an entrepreneur, you could be a trader, whatever it is, you're going to seem delusional or crazy to other people. And you have to be okay with that. You have to live with it. You have to understand that that's going to be part of my journey. I am going to be um, looked at differently than other people. I am going to be misunderstood, and I am completely okay with that. It's a hard thing to do. Coming back and being like, yeah, it's people think of trading as it's this very quick journey. But they don't look at it like, hey, if I went to school for something, it'd take me 4 years. Why wouldn't trading take me 4 years? Why couldn't being good? And that's the thing. It's not about, yeah, if you want to gamble, mess around with trading, sure, whatever it is, whatever. But if you want to be good, you want to be proficient, you want to manage money for other people, you want to do something at a high level, it's going to take time. And during that time, you're going to almost have to be delusional to keep going because like he said, the fiddler on the roof, like that's not a I heard a clear voice, that's not a normal person's thinking. And I'm not saying it's not my thing, it's the way my brain works as well. I feel like there's two parts of me sometimes, and sometimes that other part of me might be dragging me through things to get me to the next level. Yes, and like Nick just said, being looked at differently is one of the things I wish I knew going in. And yeah, it's the biggest thing that I think nobody talks about, because if you're getting into this, you want to just feel like it's going to be easy, and people tell you it's going to be easy. We had Jason Shapiro on the show, and he's telling people, hey, this is hard. These are the reasons why. And somebody writes into Shapiro and goes, great, I guess I'll listen to somebody else, because if I listen to you guys, I'm gonna be sitting here at 40 years old and then talking about how much money I can make today and how hard it was back then. And really all that is you have two hedge fund managers, and not to mention Jason's been doing this a lot longer than I have, and he's an unknown market wizards. He's has a one of the most successful and individually managed funds on the planet. And this guy's telling you something, you should probably take it to heart. And I'm not saying this to be mean. I'm saying this because I want everybody to make it as a trader. And thinking that this is going to be an easy journey doesn't help you make it as a trader. It actually hurts you. A lot of people get out of trading because so many people out there tell them how easy it is, and they see everybody around them making money, and they're like, wait, I just started this. Why am I not making money? And then they quit. So grit's the next thing you need. So if you got that ability to push through things and just have an understanding that you can get through whatever and you're going to push past it, and you have that, and you can be delusional in those instances where people tell you that your dream doesn't matter and you should try to do something else. I mean, I still to this, I mean, my well, God bless my grandmother, but if she was still alive, she'd be telling me to get a normal job so I can get a normal retirement and all these things, and that would be very normal. And I could tell her a million times, hey, I have a retirement. I'm actually doing probably better than I would if I literally started working at 20 years old at a factory or something. I'm doing much better in the retirement department. That it's just the way people work. And something you have to understand is, hey, people work this way, and it's totally okay that they're like that at times. So you have to have your own grit to say, hey, I can make it through this. I can continue to do this. I can fight through this, and I will get better. That's what you have to have in yourself. And having that inside yourself can take you past all of the other things, past the hard times in your trading accounts, past the drawdowns, past the doubt. And that's where I want you guys to get, is all past all of that and just worry about yourself, your trading, and how you're going to do this well and profitably. And so I'll get to your guys' comments in a second. So this is a couple of things from Fight Club I took that were just super interesting to me. We buy things we don't need with money we don't have to impress people we don't like. Man, is that the truth? So when you're first starting trading, let's say you buy something, you saw online, you saw this guy really pumped on this one stock. It's going to change the world. Hey, you got to buy this one. You're an idiot if you don't buy it. You're stupid. And then you buy it. And then you tell the person, hey, bought it at, this dip level, so like you sound impressive to them, which we all did when we started trading. So I would love to say I'm exempt from that, but I felt like, some people who knew about trading, I thought it'd be cool to talk to them about trading, see what they thought about my entries or stuff, just to see if I'm doing something right or wrong. And trying to feel like, hey, am I looking like a good trader here because I'm doing this? These are things that you have to let go of over time. And one is, you have to have your own systems and strategies. I don't care if am the most bullish on copper today, and I'm talking about copper hitting, a double. That should mean nothing to you. Take the analysis. I love hearing other people's analysis and work, but it means nothing to me. It's all about my signals and systems. And the same thing I say all the time, you guys have heard me say it again and again, which is, if I have a position in copper and, God came to me today and he said, Jason, I know copper is going to go to zero in 3 days. You have to get out of this copper position. I would look at God and say, well, God, my stop hasn't hit and I don't have an exit signal, so I'm going to stay long copper. And I think that's an important way to be as a trader. And the other thing is too, is when you buy something, you get this bias about it. You own Apple, and like somebody says something about Apple stock crashing, and you're like, oh my God, what is wrong with you? I can't believe it. I have friends, I have a bunch of positions that half of my friends or random people online say all types of stuff about it every day. I've been long semiconductors for a long time. We're just getting out of semiconductors now. So because of that, I've heard, hey, Jason, that's going to crash by 50% any day now. And that was back in January of 2023. So in 2023, you're getting all these people telling me about it the whole time, the whole way up. Once again, it's, hey, my signals are long. I don't care. And also not having that bias to fight with them about it, because what do I care? They might have a different time frame than me. There might be something different about them. Once again, they might be right for their time frame. Maybe there's a pullback, but in my time frame, and which is long-term trend time frame, I was right. So it's, I don't know exactly how they're trading or what exactly they're trying to do. So I just try to move on from people when they say things like that. The thing you own end up owning you. And once again, it goes back to that same point, which is, and I front ran myself a little bit, but when you own something and you fight it and you fight everybody about that thing you own, you're probably in a situation that you shouldn't be in. You're either too leveraged, and if you, basic rule on leverage is, if you have too much leverage that you can't sleep at night, you have too much leverage. but also you should do that systematically and understand the amount of leverage that you have in your account. And so that the last, and this might be one of the last slides, I'm not sure how many are on here actually, but it's only after we've lost everything that we're free to do anything. And so this is a thing that isn't talked about in trading much, which is blowing up. People start trading and they love to tell stories about how they started out and they made all this money, and the first trade they had was $1 billion or something. And it's like the first trade you may have had made money, but then you use that money and probably lost a lot of money on the next trade. Or you held on to the trade too long. There's a million things that you could do wrong. And if you don't have the humility to just admit that you did something wrong on those first early years of trading, you're not going to learn anything. I did everything wrong. It's the reason why I have the service that I do, which teaches so much, because I did so many things wrong when I started as a trader. I leveraged too much. I tried every option strategy out there known to man. I've blown up. I had to have hard conversations with my family about things it's not easy when you first start trading. So it's a situation where you have to understand that those blowups or losing money, however that works, that is a situation where you have a lesson that could be learned. And I don't know one trader that's actually like a great trader that doesn't have a story of blowing up. If you go back to the original Market Wizard series, like these are the guys that really kind of made, and they had the best returns of anybody in all the Market Wizards. So go back to those guys. There's all types of stories of them blowing up or losing money. Bruce Kovner is the only one who didn't have a complete blow up story. He just had a like 60% blow up story. So it's he didn't go to zero. Every one of those guys went to zero. So at certain points in their career. So most of I'm talking about the futures guys. I'm sure there's some stock guys in there. And yes, if you want to buy the SPY ETF or a retirement account and sit there for 20 years, sure, like you're not going to blow up probably. I would be surprised. But if you're trying to trade options, you're trying to trade leverage, you're trying to really figure out how this market works, you might have periods of time where you're going to have some massive underperformance and some massive drawdowns when you're first learning how to do this. But what I'm saying here is, for me, it's the same thing when I talked about my spleen. It's only when we've lost everything that we're free to do anything. So if you lose everything, then you can come back. And I think that's a really interesting time, because when you come back, you get a feeling of, do I really love this or not? For myself, like I had a huge, I mean, I didn't go to zero, but I went down from 10,000 to 1,000 at one point when I first started trading. So 10,000 all the way to 1,000, just wiped most of my account. And, it was a situation where you have to think to yourself, do you really want to keep doing this? Do you love this? And I remember like being in the bathroom in tears, and I'm a person, I really hold on to my emotions quite a bit, a little too much. And I'm laying in the bathroom in tears, and I start laughing hysterically. And it's kind of very similar to Michael Marcus's story, where I start laughing hysterically at myself, and I go, man, I'm trying to learn how to trade. I'm gonna figure out how to get this money back. It's gonna be fine at some point. I can do this, and for me, that was a great turning point for me as a trader, as a human, even to understand, like, I had that determination. I knew what I was doing enough to understand that, hey, like, I know what I did wrong here. Let's go back through the entire account, every single trade, go through the trade journal, figure out what I did wrong, and basically found out that all it was when I was when I was taking trades, I was just fully leveraged the whole time at the beginning of trading. And I think that's normal. I think most people, when they have, $10,000 in their account, it's only in a few trades. And for me, it was in a few options trades. And so obviously that was a very bad call. But me going all these years later, working for hedge funds, managing my own fund, growing to the amount of money that I have today, I know that looking back, that was just part of the journey. And so I'm just telling everybody here, and this is going back, almost 15 years ago now. So this is a long time ago. And a lot of people on here, and I see somebody just wrote they started trading in 2020. That's only a short amount of time in the market. So, things will always get better. And it's even for me, like I feel like I get better over time. The drawdowns get smaller. I figure out different ways to manage the money. And as long as you continuously learn and always think about it in a way that there's always more to learn, you're going to just become a better trader. So I wanted to go through some of these questions that I was getting because there were some good ones on here. So it's from Nick, Jack, and so from Nick first. There was a period while I was putting it all together where I kept asking if they thought I was losing my mind. It was a way to put up some guardrails in case I was, because I was just beginning. I love this because that's that point where you either say I'm done with this or not. Like you can be done with trading. Like people, I met a lot of people. It's kind of like I'll talk to people as I get older about, like, they'll be like, "Oh, that's crazy, you rode bikes." I did that once for like a little bit. I fell once, it hurt. I never did it again. And you see a lot of people in trading like that too, where it's like, hey, yeah, I did try that for a little bit. I dabbled with the options for a bit. It hurt. I lost a lot of money. I'm done. And yes, you could be that type of person. But I know the people who are on here, especially the people who come to my page. I'm very honest about trading. There's one thing the reason why I started doing exactly what I'm doing is because I felt like there wasn't many people out there who were being honest. Just saying, hey, here's the returns, here's what I do. Drawdown periods, here's flat periods. I do not make up trade ideas. I do not push people into trades that I'm not willing to take myself. You see exactly what I'm doing in my portfolio. That's the only thing I'm talking about and putting out. And just macro analysis besides that. That's it. And also lots of things on mindset and how to become a better trader, because I think no matter what, that's a journey. You can't just follow somebody blindly into trading. You have to build yourself as a trader. So I love that you mentioned, putting up guardrails in a way, because it's like, you might feel like you are really losing your mind. You keep trying to do something that doesn't work. It feels like you're insane. And then one day it does. And for me, going back and finally getting those really good returns and finally creating systems and strategies and being able to do that and outperform the market for as many years as I have, that's something that it means the world to me, because I know how much work I put into it. And so Jack said, I appreciate guys such as yourself providing guidance and mentorship. Trading is a lonely endeavor when you're starting off. Absolutely, Jack. And it really is, because you're part of the thing that it's mainly trading. A lot of the attraction of it is by introverts. Introverts would love to sit on a beach and just trade, or sit in their house and just trade, and the freedom to travel and trade and so on. It's what attracts a lot of people to markets, and that makes sense. I completely understand that, but also nobody is good at being completely isolated by themselves all the time, and I think it's something that our brains do, to make us feel like we would love to be alone all the time. And I don't think anybody really wants to be alone all the time. So, the thing that helps me is to have these type of discussions, bringing on my friends, people that I really respect in markets, having these types of conversations, having guys like you write in, or girls like you write in, whoever wants to write in to here and chat things. And I'm also very open to, like, we have a chat room on our Substack page. So if you guys go to the description on here, you'll see I put up our latest free post on our Substack page. And so you can see that there's a lot of chat rooms on there and stuff where you get a lot of other traders that you can chat with. So, and I think the thing that I always take away from trading and is the people that I met early on in trading, like some of the rooms I went to, or like groups I started out like subscribing to, I didn't really get much from them as traders, but I did learn to meet some really cool friends. I mean, that's also how I met Kashop. Other people that I've met over the years, meeting through things like that. That's the great thing to me about trading, making a good friend group of traders who really love doing this, who are here no matter what. Um, then Nick said, and if anybody has any questions, feel free to write in. Um, Part of going about the process without a mentor, get yourself a mentor. And yeah, I'm torn on the mentor thing because sometimes and not because I don't think you should have one. You absolutely should. Everybody should try to find someone you look up to at the very least. Someone that's like trades like you. And that's the thing too, is if you are going to subscribe to someone, find somebody who kind of matches or enhances your strategy. Someone like me, you might look at it, if you're short term, you could look at it like, okay, I trade inside of the trends that Jason's laying out, but also I look at Jason to model out how he does things, which will help me model out how I do things. And that's kind of why I put so much stuff out there all the time. And then going back to, so I also appreciate what you're providing. It helps me a lot. I appreciate that. Thank you for saying that. It means the world to me to hear things like that. So I did that with bicycles, fell hard at 4 and didn't get on one until I was 23. Took me less than 5 minutes to learn it, and thinking all I missed because I didn't have the grit changed my outlook 180 degrees. So I love this conversation because so many people on here are just kind of chatting about um, all the things that they have to go through as a trader. And I think that's important because when you're going through these journeys as a trader or a rider or whatever it is, like as long as you keep pushing through it and keep going, you can make it to the next level. And I think that's the important thing about this trading journey here, or in markets, is to understand, like, if you just do keep going, like there's a lot of people on here who will tell you, oh, you don't have it or you do have it. I think really it's, if you have the courage to keep going, this will work out at some point. I love that Dave wrote in too. Your investment journey is quite inspirational, like my pinned tweet. We discovered and learned much about ourselves at the highs and lows. All the best. I love that Dave wrote in, and the reason why I'm talking about Dave is because Dave's been trading for a very long time, and him and I has talked about this trading journey over and over again. So this is the other thing: find people that have been doing this for a long time, write them. Don't be afraid to get people to ignore you or say no or something, but like ask questions. I'll give you a funny story before I go. So this story is me, Jason, at about 12 years old. So it's real embarrassing. So bear with me here. So when I'm about 12 years old, there was a guy named Jason Suchin, nicest guy in the world. Had no reason to be as nice to me as he was, but he was very nice. And I would write this guy every day. How do you do this trick? How do you do this? How do you do? And I would hit him up every single day, all night long. It literally be one time it was about 5 a.m, and I write Jason. I say, hey, do just me being a little kid, I probably have messaged him like 12 times at this point. And the last one was, hey, do you ever get up in the middle of the night and go outside, because he had ramps in his yard, and go outside and like rip shit, like go shred in the middle of the night. I said rip shit, and he said most of the time when I get up in the middle of the night, I pee. I literally bothered this guy as much as I could. But the point is, feel free to write people and like ask for help, or ask, hey, what could I have done this differently? People send me charts all the time. What do you think of this chart? How could I do this differently? Don't be afraid to do things like that. This is exactly what I did to become a trader, and exactly what I think any good trader does is ask the people who you look up to and who inspire you to do this well, and then they will help you to kind of go at one direction or another. And don't be afraid, if one person says no, the next person might say yes, or 5 people, you might get 5 no's and 1 yes. But I try to do my best to write people back if I can. I am also get busy at times. I have lots of things that I'm doing. So once again, I do my best. So feel free to write in. But all right, guys, thank you guys for going through this journey with me. It was a fun little experiment, a little bit different than we usually do on Fridays. So we'll be back on Monday with the commodity report at 11 a.m. We'll also be back on Friday So Friday will be with Kashop on here for the Holy Macro Show. We're going to go through some history lessons and how those pertain to the market. Thank you so much as well. And then Nick said, just to end it off, trading is a lot like sports, specializing in one sport to be specific. There's a point where the game slows down and you can start anticipating where the action is going instead of always reacting. I love that. Thanks, Nick. Thanks, guys. Thanks, Johnny. I'll see you guys soon. And Jack.